You have invested a decade of your life and significant capital into mastering a highly specialized set of skills. Most employers offer group long-term disability as a benefit, creating a sense of security that is often misplaced. Standard group plans typically cap your replacement income at 60% of your base salary. These policies frequently exclude bonuses, commissions, and incentive pay from their math, a massive oversight if your compensation is performance-based. Additionally, when an employer pays the premiums, the eventual benefits you receive are treated as taxable income, further shrinking the actual payout. Group coverage is capped, taxable, and ignores bonuses. Individual protection offers tax-free benefits covering your entire earnings. The biggest risk is the any occupation standard. After 2 years, group plans stop paying if you can work any low-paying job, ignoring your specialized training. Relying exclusively on an employer's group plan leaves high earners with a massive income gap that can be impossible to recover from after an injury. To close that gap, many professionals turn to Guardian Life's Provider Choice Contract. It has a long-standing reputation among physicians and attorneys because of how the contract is written. The trade-off is straightforward. It is one of the more expensive policies on the market and requires rigorous medical underwriting. That premium pays for specific claim time language. This contract is built to pay out in scenarios where thinner policies might lead to a contested claim. Your challenge is determining if your career actually requires these specific protections, or if you are paying for features you don't need. The right choice depends on matching the policy's dense legalese directly to the risks of your specific occupation. The most important provision in any disability policy is how it defines total disability. Weak definitions penalize you by cutting off benefits if you choose to work in a new field while you are disabled. Guardian's true own occupation definition changes that dynamic entirely. If a spinal injury prevents a litigator from practicing law, but they take a position as a university professor, they collect their full disability benefit with no reduction for their new salary. For physicians, Guardian adds a secondary qualification path, a source of earnings test. If a surgeon develops a tremor and can no longer perform procedures, they qualify for total disability even if they can still consult, provided surgery generated more than half their income. This dual-path assessment, measuring both your specific duties and your actual income sources, is what allows a specialist to rebuild their career without forfeiting their insurance benefits. Most disability claims are partial rather than total, involving a slow return to work with reduced hours or lower surgical volume. This matrix shows how your role determines which riders are worth the cost. The Enhanced Partial Disability Rider is a key example, triggering payouts at just a 15% loss of income. It's a vital tool for specialists and practice owners needing a financial runway. If your income relies on a referral network or high volume of procedures, returning to pre-disability earnings takes months. This rider stays in force during that transition. However, for the salaried W-2 row, this rider's value drops significantly. Most salaried roles are binary. Paying a higher premium for a 15% income trigger rarely makes sense for a fixed salaried employee. The decision to add expensive riders should be driven by how your specific income recovers, not by a standard sales pitch. A fixed monthly benefit might seem adequate today, but 20 years of inflation will drastically reduce its value over a long-term claim. The Cost of Living Adjustment, or COLA rider, addresses this by compounding your benefit amount annually. This protection is valuable, but it carries a significant upfront premium cost. Beyond cost, the primary barrier is Guardian's strict underwriting process. Your occupation class determines your price and which features you are eligible to purchase. Even minor entries in your medical history can result in a declined application or permanent exclusions on the policy. Elite claims language is only an asset if you can pass the initial scrutiny required to put the policy in force. Let's map out where this contract fits best based on your specific scenario. The flowchart begins here. If you are a highly specialized earner, you move to the next qualifier. If you have a clean health history, Guardian Provider Choice is the right fit. It provides the resilient language that specialized earners need. If you have significant health complications, your priority should be finding an alternative carrier with more flexible underwriting. If you are not in a specialized role, the most efficient path is to audit your group coverage and purchase a simpler individual policy to fill the gap. This contract serves specialists with high earning potential and clean health histories. Budget-conscious earners or those with chronic conditions often find practical value with other carriers. Navigating these choices alone or through an agent who only represents one company frequently leads to paying for coverage that doesn't fit. Independent brokers like Diversified Insurance Brokers provide an objective alternative. They evaluate your medical records and occupation class against the top carriers in the market, benchmarking Guardian directly against competitors like MassMutual and The Standard. They also audit your employer's group plan to ensure you aren't over-insuring yourself, so you only buy the coverage needed to bridge the gap. This process requires an initial consultation to review your specific math, but it ensures the policy you buy will actually perform when you need it. Contact Diversified Insurance Brokers for a custom quote or a second opinion on an existing offer. Protecting your career requires an expert who can decode the fine print and build a plan tailored to your actual risks.